Okay. All right. Hello, guys. North Star Bad Charts. Kevin is on vacation. What's that about? But he said, yeah, he gave me full confidence. And with us today, guys, we have Costa. A while back, I did a post like at my newbie attempt of trying to do harmonics because, you know, if I read something, I have to try it out. And Costa, he reached out because I asked a question, says like, what am I doing wrong, you know? And then Costa was nice enough to point out some stuff, but I still felt like this is just the extreme tip of the iceberg. And with anything that you're just touching, it's super dangerous, right? Because you think that you've got it. But so I invited Costa to come and talk to us more about harmonics and nuances and anything that could help anybody new to it, to try to, you know, like almost like a crash initiation course, right? To see where this could lead us. So sorry about that long intro, Costa. If you don't mind telling folks maybe a little bit about yourself, there be great.
Hey guys, yeah. So my journey has probably been the same as probably everyone else's. I have worked in IT, worked in academia. I've run a small property business in my time. So I've done different things at different stages of my life. And I was sort of advised, one by somebody that I worked with when I worked in institutional banking, and my wife, that I should try trading. It was kind of the next sort of stage of my life, and I wasn't very good at it. Quelle surprise. So I realized it was something I had to work at. I needed to sort of find something within that that would help me, and technical analysis was the way forward for me. I'm quite a scientific-y type person, and I still wasn't very good at it. And a lot of practice I needed to do, sort of classic technical analysis. And then I was introduced to a harmonic trader who became my mentor and teacher. A big shout out to Rose Eleanor from London. And he took his time with me and basically taught me. We studied the various forms or various patterns within the harmonic arsenal, let's say, things, bats, butterflies, ciphers, sharks, Gartleys, the alternate Gartleys, the deep crabs. I mean, there are lots of these, and it's I guess I should say that, you know, in the time that we've got here today, how much of that we might be able to cover, I don't know, but I will give it my best shot. But it basically changed the way I interact with the markets. I find that they do work pretty much in any time frame, but in terms of what I do, which is on the smaller time frames, if I'm taking trades, it can be a day trade across a couple of days. Sometimes a lot less, an hour, maybe even less than that. So I like to think of myself as being a nimble trader, and I think harmonics and Fibonacci and these, along with the classic technical analysis, helps me. I've prepared well, actually, I'm using something that was prepared by my mentor some time ago as a way of explaining kind of how we can take that leap from traditional technical analysis and incorporate harmonics within that. So let's make a start on that. So
I can't wait, Costa. I can't wait, man.
Let's share a screen.
Yeah, please.
Okay. Just to check with you that you can see that.
Yeah, there's one thing with Zoom, Costa. I'm not 100% sure, but I have a feeling when it's finished recording, our pictures might be in the top right. So if ever you do work, consider that the top right section of your screen might be blocked by our camera videos at the end there. So,
okay. So yeah, that's cool. I've got 3 screens here, Patrick. I can see pictures of us in the camera there, and I'm hoping that you and your viewers can actually see that full chart. So what we're looking at here is in the FX markets, particularly the Euro USD pair, and we have a pennant. So that pennant obviously takes time. It's forming, so we need to take a bit of a leap here. You know, obviously that's all happened in the past. But what I'm looking for as a harmonic trader are formations of W's and M's. So the candlesticks, as they develop and create a structure, that's what I'm looking for. I'm actually looking for it before it's formed, and there's a specific way or a process that we can go through. So in this instance, we have the pennant, and we can see a W formation right there. So as a harmonic trader, we measure everything, and to measure we use a Fibonacci. On this, because it's a W, we kind of go in from the swing high to the swing low, and as the different legs of the harmonic pattern are formed, we will look to see what they correspond to in terms of the rule set. Patrick, you know yourself, charts are never perfect. Yes, we have rules for the harmonics, and something, this is a nuance, something that I found, I was in the beginning was always looking for perfection, and it rarely exists. That doesn't mean that you should be reckless with what we identify within patterns, the W or the M patterns. It just means we have eyes wide open, and we're constantly looking for evidence to support whether we take that trade. So in this instance, we have this pattern. So get that right.
Are you using, and the perfection, do you mean like the ratios, the textbook ratios there? Like, let's say somebody Googles harmonics and it says it has to be 1.618. Is that what you're talking about? Like,
yeah. So, I mean, so in this instance, I'm identifying that as a Gartley pattern. It is on the D point, so actually, I should say at this point, obviously we have the legs. We start at X, A, B, C, D. The D is the reversal zone. Now, harmonics are reversal patterns. That's what we're looking for. So the reversal, price reversal Fibonacci would be the 78.6. So we are over. We need to decide, is that within some kind of tolerance? And guys, you will, through experience and practice and back testing, figure out what your own tolerance is. 3%, 4%, 5% possibly. For me, I'm looking at the picture quite literally of what the whole pattern is. I'm looking at what those fibs are telling me. There's a constant thing in TA that we look left. Is there any clues if I look left? And obviously, is there any kind of divergence? So let me just. So we have a bounce. We have arguably a tweezer top there. So we have something to trade. Patrick, sorry, you might need to edit this bit. Do you want me at this point to talk about entries, targets, and exits? Because what I'm trying to do at the moment is tell a story as opposed to the detail.
You choose. We could tell the whole story because I have a feeling that this will, this could be like a multi-series type of podcast because it's like practically impossible. So you could tell the whatever story you want, and the technicals of how to actually, like from an operations type of thing, the guy actually wants to play, where you put the sell stop, all that. You could glance over it if you want, but I don't think we have to be that finicky on the details. Just
I'll tell the story now. And
yeah,
we
it's
look
just so
at
folks
what we do.
they could fall in love with harmonics, you know, and say, wow, like this is like the next best thing there, this Fibonacci guy there.
Cool. Okay, so we have a harmonic, Gartley. We can see that we had the reaction, and obviously at this time it's forming. You know, we have the points where we're forming that kind of wedge. So we have that bearish move. So W's are bearish and M's are bullish. Okay, let's move that on. So actually, I'll leave that there. So now we're creating the support, if you will, of the wedge. And right at this moment, this is kind of, you know, your TA, normal sort of TA is expecting that bounce there. That would be the trade, right? Obviously, that's not happened. If we are in at this point, and depending on, because the targets would be set, right? So we have the rules around what the pattern should look like. We also have the rules around where we take profits, and different patterns have different things. Let me just double check. So Gartley is a 38 point, is a 61 point, is a 1, 2, 7, and then it kind of gets a little bit complicated. But as we said, we're looking at that later. The point being is that some of those are going to be beyond and might actually be in this area here. So you might be able to squeeze a little bit more out of that trade.
All right. So let's just recap. So let's say I see a W pattern starting to form as that last leg from C to D is starting to morph. I'm morph into existence. I'm keeping a keen eye on that because I'm looking for any type of clue that either the extent, like the extension, a resistance, as soon as it starts turning down, like you mentioned, the tweezers, that could be my thing. Okay, this is it, man. The patterns, it's about to be completed, and I'm going to have a downwards target.
Absolutely.
That's how you try to. So it's on that last leg that you really keep an eye on the harmonic.
Yeah. So how I personally manage that is because I'm actually measuring this point. I'm, you know, before B is formed, I'm looking to see what B is going to be. The B point is vital because it's that identifies what the pattern potential is. So obviously we have the reversal from the B. We need to form C at that point, and you know, within the rules for that has to be kind of below this 38.2 on that XA fib that we initially drew, and at this point, once we have that reversal, it's game on. So okay. I'm marking this as an alert. I'll set an alert right there. Yeah. So
from from X to A, then A to B is a 61.8 retracement. Is that, am I reading that correctly?
You are reading that correctly.
And after that, if you go back down to the 38% retracement for C, then you're looking for a bounce up, right?
Correct.
Okay.
Yeah, and you know, that bounce can be anywhere in there. Now I say that is heavily caveated, because there are other measurements that one would need to do to confirm and make a judgment on what it is that you're seeing. Again, I think within this podcast right here, it's probably not within the scope to cover that right now. So yeah, so I mean, once I've got price, once that price action and that structure is moving above this B point, you know, so we can kind of do something like this if you want to do it, you know, visually, mark across there, you know, and oops, I'm going to set a crossing alert. I'm guessing your viewers will know how to do that.
Yeah, it's a great feature of trading, you guys. And I see, Costa, you're pretty good at it. Use the alerts, guys. Why keep an eye on it? Identify your levels, put the alert, and go look at another instrument until that bear trap's triggered.
There is another reason for that as well, because this is not taught you in the books, okay? But there might be a trading opportunity once you've kind of passed that B point, because you're anticipating a reversal zone. Now, this is not something I would recommend on smaller time frames. Maybe on something, I mean, we're on the 30-minute there, possibly just about borderline an hour, maybe. But you might have an opportunity in there, but that comes with warnings. I think you need to be a lot more experienced. You need, certainly within harmonics, but obviously the price action is expressing itself to you and giving you information, and you need to interpret that. Let me just turn that indicator off. For me, there are things that I use, and I'm sure we can hopefully find the time again to delve into that and to look at that.
Yes.
Cool. Okay. So let's leave that there. So we were expecting now a bounce here, but we broke below. So what's going on? Well, we're forming an M. So we probably should, I'm leaving that there. We should probably measure that. So right now, we may not necessarily have, actually, we have a bat. So once we broke, this is getting very complicated.
That's good. I think it's, that's well layered in, Costa, there. So yeah.
So we can see that we have an impulse XA reversing down to B, which happens to be the A point of our Gartley. Okay. We have the price reversal zone D point of the Gartley, and because we're reversing there, we're now looking for that break lower. Okay, so again, you might want to set an alert at that point, and equally, actually, I should point out that because we are measuring, where am I? Because we are measuring, I should measure it this way first. Okay, so we're in that reversal zone, or sorry, we're looking for that reversal zone for a bat pattern. So the first pattern was a Gartley, the second pattern is a bat pattern, a bullish bat.
So, okay, just for the viewers, so everything is based, that X to A move is the most critical one, because all the other retracements are based off that X to A, right? That's where you set your Fibonacci. So
yeah, swing low, swing high, swing high, swing low, right? Yeah, but I can't emphasize it enough that it's the B point that's going to give you the clues of what may and potentially arrive later. Okay, so we've got this this bat pattern that we can trade, and it's a lovely little structure that we formed there. Let me just lose the M. And, just to cover it very quickly, what we do, Patrick, is we need to measure now that CD leg, okay, and we will look at then what our price point targets are. Okay. If it's,
yeah. So I'm sorry to interrupt you, because there's so once could you have played as you close below that horizontal breakdown line at 112.98, and you knew that the destiny of that M was pretty much somewhere in the D point? Could you have started shorting and just played before even that M completes? Could you short all the way down to point D
So that was the point I was sort of talking about earlier on. The harmonic pattern is not, that part of it is not taught in the book. And I'd have to say, unless you were very experienced and, I think I should add that you've been charting that particular instrument, whatever it is, that you have a feel for that ebb and flow, what those impulses, what those waves are, then yeah, I mean, we look left, right? Okay, so there's our point, but we've kind of got this little structure there, right? Which was flagging before. So, you would take a view on that as it was passing. I mean, is there any other clues that we can sort of see that's in there? I mean, well, yes. So in this instance, it might be something that you would have done, but it's not the harmonic that's telling you to do that. It's going to be something else. You're just using the harmonic, kind of maybe thinking a little bit ahead, but that's not what the harmonic is about. Like we're traders, guys, right? We look for any edge, or not any edge. We look for an edge, where we can turn a profit. If it was me, I'd be looking to potentially take a trade. I always look to potentially take that trade. Okay. Does that answers? Okay?
Yeah, perfectly. Yeah.
Okay. This
podcast is more for me than for our viewers, Costa. I'm so selfish.
just on that point, for me, it's very much game on, because it gives me, how do I feel, something else in that market, or to do what I do in my trading. I mean, sometimes I have been anticipating that move. So we've passed the B point. Let's just use this as the example here, prices falling. Now, this is not advisable, what I'm going to say, but it was on a much smaller time frame, and I got a potential bat that's forming there. I'm thinking, right, as soon as that 88.6 hits, I may even have an order in there. I'm going to go long, and I'm looking for 10 points, quick bounce, right? Minute, couple of minutes, 5 minutes, whatever. It probably not even that. And, that works sometimes it doesn't. But of course, your money management, your risk management, and the way you go about your business should inform you of whether you're are going to take that kind of trade or not. It's surprising that what these fib levels show you, even before. One time I spent probably a day, and I was kind of looking at these, so you got an impulse move, flagged and it went on, bull flagged and went on. And it's really surprising that the measurement that you get after is entirely predictable that you would have measured after, if that makes sense.
Yeah.
So you can almost see what the possibility is. I'm not suggesting that people take those trades. I use Fibonacci pretty much for everything. Okay. So just sort this out. I'm going to leave the bat there. More clues, guys. We've got a nice little falling wedge forming there. There's our price reversal zone. We've taken, assuming we take that trade, we move on. We're flagging again. Full flagging, because where I come from, flagging means you're falling asleep. Couple of double tops. Let's take a measurement. So this is where Fibonacci is really good for me. Okay, I include Fibonacci within harmonics, although they're not a pattern. It's just a tool that we use to measure. So here's our swing low. Here's our swing high. We've got obviously this double top, but notice that it's finding support at this 38.2. Specifically notice what this 61.8 is showing us. You know, very good support, very strong support, 61.8, the golden ratio. If I may make a recommendation, that is an amazing book.
Carolyn Brodin.
Yeah, Carolyn Borodin.
Okay. I'll put that in the description of the video there if folks want to.
I mean, it's pretty next level stuff. But even if you just want a kind of a basic understanding of Fibonacci, it's pretty good. It's amazing. And this is something, you know, that I use. I'm looking for, you know, kind of, you know, if we break through that 38, is that going to hold? Is that going to hold? That gives me, you know, confidence. And of course, we have, you know, our retest. You know, we got the retest of the highs there. We got this retest going on down here. So we got a reversal zone. One, two. And then, after, you know, assuming that we've taken that trade, I would include it as harmonic because I based it off the harmonics. But yes, it does not form a pattern. So we must never forget. So situational awareness, Patrick, right? Where am I within the structures? And left is a clue. Look left. Let's keep looking left. Okay, so we've got, you know, if we've taken this trade, yes, we can see this flag in, you know, but this was an area of resistance, excuse me, you know, in the past. So you may be thinking, you know, kind of exiting at that point. I'm going to, which I didn't include in this actually. I just want to check something. Okay, so I probably would have been maybe out there and there on my smaller positions. I would have exited before that, but you know, you kind of let some run, you know, while it's all in play. So we can see this kind of 127 and this 161, which is reciprocal of the 61. Okay. But we look left, 190. Okay, we're out. Let's hide that back.
Costa. Okay.
Yeah.
Just after that. Okay, that left, that M. The M's the bat, right?
Yeah.
The M's the bat. So once that it turned up and started moving up, whatever happened to the right of that, the targets is not the start of the M, right? Is it necessarily like the D point or that's not the natural target, right? Then you have to look for other clues to know when to exit of that.
So on the bat, so first thing to say about targets, all targets start at the 38 and the 61. So we measure, right? C to D. That gives us the range that we're working in. So we've certainly, I mean, depending again now on people, how they manage, right? But your first target is hit 13:30, maybe 14 hours. Excuse me, about some water. After you've entered that trade, depending on when you entered and what signal, again, we're going to look at that, you know, later. The 61 does eventually get hit. you know, I can't speak for people's or advise on, I can just tell you what the rules are, right? I read, or sorry, a peer of mine, somebody who I occasionally work with, and I seen this on Twitter as well, that sometimes traders, they're either waiting for the 100% and the money is lost 92 to 100, yeah, or they're out between 0 and 8. So you kind of bear that in mind, right? You know, so maybe in this area, you know, what's the difference between, you know, 0.42 and 0.65? You can see that that might be getting a bit toppy with the structures that we have there in terms of the candlesticks. So risk management, money management, management of positions, not all the management of positions, but certainly management of the positions, like we would do in any trade, really. Does that answer it?
It's very clear. Yeah. Yeah.
Cool.
But I like these 38 and 68% retracements because I call those like non-greedy targets. Everybody's always waiting for the full retracement, and so that 38, in between 38 and 61, sorry, I'm dyslexic. Sometimes the Fibonacci's, I say 68, but in between that 38 and 61, that's a great profit-taking area.
Absolutely. I do most of my best work in that area.
Yeah. Yeah. Well, you get out before people get greedy, before the resistance comes in, and you lock in enough profits where it's for the risk to reward ratios, they make sense, right?
Yeah, absolutely. I mean, you know, let's just talk entries at a very basic level for a second, right? Or rather management at a very basic level after an entry, right? We have entered in this zone, okay? You know, and we can see, you know, we've kind of, obviously we're after this impulse here, okay? We're looking for that 38. Now, if that's me and my, excuse me, you know, my stop is down here somewhere, you know, depending on my position size as well, guys, don't forget, or at least for me, you know, I have a couple of different accounts, and depending on what account I'm trading, what my risk profile is on that will determine what I'm prepared to lose on the trade, and then depending on where my stop is, will inform me of what my position size is on that. But you know, let's just, our stop is down here somewhere. So once I've hit that, you know, my stop is there. Okay, all right, we've you know, let's assume that we've not exited. You might not have seen a reason, you know, to exited. We might have taken the, you know, let's say it's 50% off the table there, 25% off the table here. Okay, we get this bounce. You know, once we're beyond the 61, my stop is there. That's kind of the way how I go about managing that. But like I said, I'm pretty nimble. You know, so you kind of, you're reading it as it's playing out, right? Because there are groups of structures. When I look at a chart, I see one big structure, I break it down, and I see substructures, if you will. Within that, I will see trends. And you kind of keep on breaking it down into, I said, I like to break things and then put it all back together. And that's just the way how I go about my business. I mean, if you've taken this trade here, you know, your stop is down there. Let's look at that. How might I? So for me, right at that point, there's my fibs. I'm kind of looking at that. So, you know, I've entered my trade, 50% off, 25% off. You know, I might rejoin here actually, you know, on that breakout. But again, you take a view. You know, maybe at 127, you'll take 50% of the 25 that's left. Each all the while you're adjusting your stop position. But we will each manage it in different ways. One thing I have noticed, I mean, you've got to have confidence in what you do, right? And you have confidence by knowing what you're doing. You know, because at the end of the day, this is all about probabilities. We're playing the probabilities, okay? And our system or our patterns, let's just call it our edge, is only one part of that. You know, there's more components to how we go about our business. Is that okay?
Yeah. Costa, I'll have, I'm going to recreate a new Zoom session. I'm going to edit it because this one, since it's Kevin that has the pro Zoom account and I was limited to 40 minutes, I'll just create a new link and we'll finish it. We'll continue it there. I'll send it to the Facebook, not Facebook, to the Twitter DM, if you don't mind.
Absolutely, mate. That's fine. I just need the men's room. We'll have a little break. And,
good. Perfect. Good timing.
Good stuff.
All right. See you soon. Stop recording.